be sure to look out for that in your inbox. This session is also approved for 1.2 CTP and FP&A credits, and those will be emailed to you along with the recording and the slides as well. So look out for those as well. And with that, I'll pass the presentation off to today's presenters.
Good morning, everybody. This is Ian Marlowe. I'm the founder and CEO of FITECH Consultants. And a little bit about our company. We're known as the IT department for any real estate company. Our specialty of our company is understanding, designing, and installing very specific real estate platforms like Kariba that bring immense value to our clients. We are one of the only companies in the world that are certified in Yardi, MRI, and RealPage, as well as interconnecting various products to those platforms. So we appreciate you joining today and very much look forward to walking you through some amazing capabilities and ideas in the real estate technology space.
Great, Ian. Good morning and good afternoon, everybody. My name is Tom Gavigan, and I manage the North American Pre-Sales Group here at Kariba. So specifically, we work with prospective clients as well as our existing client base in determining and evaluating their specific kind of treasury and liquidity and risk management needs and aligning that to our solution. So pleased to have everybody join us today, and thanks for joining. What we'll do is we'll go through, from an agenda standpoint, a couple of topics that we want to address and go through as we kind of go through the session here today. First, we'll just kind of start off with an idea of why is forecasting so important, and why are we with such a push for that, specifically in the real estate world. And then what we'll do is we'll talk a little bit more on the specifics of the real estate technology and the market trends related to that. I'll go into from there talking a little bit deeper in terms of the importance of bank connectivity and bank visibility and how that really is fundamental and foundational to the forecasting process. We'll go into ERP integration and also the importance of kind of having that and leveraging that as a part of our overall solution and forecasting process. And then from there, I'd love to kind of take you into the application of Kariba and kind of talk through how it's used by our existing clients and similar clients as you, and how it's used from a forecasting and cash reporting perspective. And then finally, we'll just wrap up the session here at the top of the hour and go through any sort of takeaways and final thoughts from there. So first, let's start off with why forecast. Forecasting, there's a number of reasons in terms of why you might forecast and how to actually go about getting there. As we look at kind of the different the pillars there, if you will, or the pyramid there of the elements to kind of seeking out technology and leveraging technology. One of the areas with forecasting is it hits specifically on the ability to kind of have better, more effective financial decision-making process. So ultimately, when we look at forecasting, what we're trying to achieve and what's really important to understand is that objective is what is that? What is that objective, what we're trying to get to? So is it identifying kind of excess cash and excess liquidity that we can use for different strategies, whether it's looking at longer term investments, looking at repaying any sort of debt that we're sitting on, possibly opening up some working capital strategies and looking to pay suppliers early, for instance. Maybe it's mobilization of our cash. And for those that are in foreign territories, even just Canada and Mexico, is there the ability or the need to repatriate cash that's sitting offshore there? Or is there internal things that we might be doing better with our excess liquidity? From a cash flowing perspective, would it make more sense to be able to easily transition our cash from one entity or one portfolio to another entity or another portfolio? From a risk management perspective, kind of on top of that, those that might be in other areas or other regions of the globe, are we exposed to volatility on the currency market? Will having a better view of our cash forecast help me in kind of effectively hedging any of those exposures? Or just generally from a liquidity perspective, we're looking at restructuring debt or taking on and investing in new portfolio of real estate holdings, or maybe acquiring. Will we have that liquidity? And if not, how do we go about getting that? And then lastly, being able to be just ultimately more strategic, being able to work with our CFO, our finance team, and give more effective free cash flow guidance, being able to return cash flow to our shareholders that we might have, as well as being engaged more, say, from a supplier financing side. These are all ideas, objectives that might align with you or with your company, ideas that you might be seeking out or might be relevant, and this is ultimately why we see such a focus and such a prioritization in the Treasury world as it relates to forecasting. But the reality is that ultimately there's usually challenges that various companies face, and here's just a few of them. And you guys might be saying, "Yeah, I want to do this, or I want to achieve those things, or I've been tasked with that, but I have these issues." And usually, number one, it's a resourcing constraint. Treasury groups and finance teams, they're not big, and there's only a few of you, and we understand that. And how are we going to do this? The manual work that it takes to get to our forecast, it takes so much elbow grease and effort. It's such a limitation on our end. Sometimes we just don't have reliable data. Maybe we do forecasting. We see this all the time. We do our forecast, but we just know the information isn't good. It's garbage in and garbage out. So we don't really take it too seriously. We produce it, but we don't really track against it. We don't validate that it's right. We don't go back and back test that in any way. And that might be because there's not an alignment. There's no accountability, that we don't have that need to assess our forecast and understand if it's accurate, if it's in line with what we were expecting or what we wanted to do. And to have that alignment might be something that you would want to achieve. These are just some ideas in terms of the challenges, like I said, that we commonly see or that Treasury groups are specifically facing. What we'll do is we'll look at how we can leverage technology to help in these things, to better and kind of reduce the reliance on human resources, as well as ensure that our data is accurate and that we're forecasting in an efficient way.
Okay, thanks, Tom. And in following up on that, one of the things that we're really looking at here is to understand how things are really changing in the technology market for real estate. And as we look at this, you can see that it was only just a few years ago that everybody considered their ERP system just the general ledger. And that's actually a very significant misnomer. We actually see today that the average client that is in the real estate space is using at least 6 to 8 different systems or modules to automate their business. And this is a large place as an example that and what we call ancillary modules that are critical to automating the operation and pass data to and from the GL, but now are coming into full scope and full usage. And Kariba, as an example, is one of those products where Treasury and Treasury functionality is very much at the forefront, allowing for passing of that data and utilizing a Treasury platform on top of using a general ledger system. So we'll look at some of these questions that we have here, which come up to our firm regularly when discussing clients considering different alternatives in terms of platforms, systems, and modules. So our first question here, what technology trends are you seeing in the real estate industry? We are really seeing a great investment beyond the GL package. We are seeing a concerted effort, both from the finance perspective as well as operations, to have immediate and instantaneous visibility into the business on multiple levels. Treasury is one of the fastest growing areas that we see these continued requests, and it's something that for the department that will handle Treasury inside the organization feels that there's a life-changing move by incorporating a module such as Kariba. So now our second question, how do we think these trends will impact real estate management companies and their teams? It's very interesting as we see this trend of the change from only the general ledger to operationalized modules becoming part of the fabric of every ERP system. That when we talk about management companies and their teams, this is now touching not only the real estate owner and operator, but the third-party manager, the broker, and their extended operational teams that in many cases are decentralized. And on a decentralized platform that includes users that span a large geographic area that are also serving the need to have consolidated data infrastructure. So the impacts that we really see for this change is to be able to provide very powerful centralized tools that allow for the management company operators and the extended teams of those operators work in a way that give them access to information that's centralized, but allow them to operate in a decentralized platform. That clearly shows with the move that you're seeing for almost all products, whether ancillary module or core GL, to the SaaS platform. So really, for watching everybody make that move in these just past few years, and it will continue, from going from any self-hosted instance of nearly any platform to either platforms that are SaaS-based and or hosted in secure virtualized environments. These are giving the ability to roll out things that would have only been centrally used at a home office and now being able to be used on a national and international basis. Now, rolling into our third question here, which we get all the time, is how does FITECH help real estate companies? Well, we understand what it is to be on the side that all of you guys sit on. Myself, in my own background, I'm the former global CEO for Newmark Knight Frank's management company, as well as the CIO for Newmark Knight Frank. Most of our team are out of the owner, operator, and broker model, where we have worked through the struggles and need to understand from our clients what those hardships are. And when we look at the various systems that they're utilizing to make up their ERP system, where we really help our real estate clients is having them understand the value of the various products that really change the ability to operate, not only in a home office, but on a national and international basis. Where people have questions, why would I make this change? Why would I invest in this product? Why is this product the right fit for us? How does it culturally fit into our company? And is this going to enhance that culture? And the answer is yes. The question becomes, how do you fold it into that culture so that it becomes an adjunct to your success? And these are where the opportunities really are, that in terms of automation and giving transparency of products like Kariba, it's bringing that value and being the capability of give that transparency on an immediate basis, regardless of where the people are located. So, Tom, I think we can hand it over back here to you for the coming up to the banking activity.
Yeah, and that's a perfect segue into that discussion. So one of the fundamentals we talk about the importance of cash forecasting and being able to construct and get more accurate with your cash forecast is actually related to what's happening today inside of your bank account. Fundamentally, we believe as a philosophy that banking integration and bank data is a elemental piece to the way forecasting is done, and there's a very important area there related to the technology that you might use to kind of facilitate the forecasting process. So within Kariba, well, before I talk about that, what I should say is that traditionally, as we look at kind of Treasury tools and Treasury technology, and what I mean by that is maybe just your Excel worksheets or Access databases that you might have in place, or maybe it's old legacy historical TMS systems as they were. But ultimately, what the world used to be would be relying upon connectivity and connectivity providers or connectivity vendors or internal IT. And what they were doing is facilitating the communication channels with your banks. Those are your domestic banks that are located across the U.S. in different regions that you're using for your different properties and things like that. But it also could be, say, international banks or international groups where you might have holdings, say, again, in Canada or across the pond. And that's what they're specialized in. They're responsible for connecting to those banks. They're responsible for bringing data in or pushing payments out, and ultimately just giving you that data, pushing it through a firewall, and on top of that firewall might be different systems. And by systems, again, it might just be an Excel database where you have tools that are in place, as you see here, things that I use to manage my daily cash process and my cash forecast. We use something else when we want to manage our payment workflow. We also do some risk management in relation to some hedging policies. We have a tool that we use for that. We have all these disparate systems. and you're trying to bolt them together and ultimately struggling, maybe through IT work or through consulting engagements, to try to bolt all of this together, share the relevant information and the data, and also connect with your banks. One of the things that we've looked to do, and again, a philosophical component to Kariba, is that instead of leveraging that outside provider or relying upon internal IT groups, we've put in place our internal connectivity hub. So when we talk about using technology to manage your cash positions and manage your cash forecasting and do your risk management, underneath of that is a technology that is used to host and manage all of the different connections to your banks and to all of our clients' banks. Currently, we have 1,600 clients on our single platform, and with that, we've had to connect with hundreds of banks across the globe. And those are going to be, obviously your domestic and big name banks, but this is also smaller banks and smaller branches, and in regions that are more difficult to typically work in from a regulatory perspective, areas such as India and China and Russia. Kariba leverages different connectivity protocols and different connectivity methods, as you can see some examples laid out here. Typically, if we're talking about your domestic bank operations, we look to just kind of do a host-to-host FTP connection with those banks, but there's other methods via SWIFT, perhaps, that we could also leverage when we look, say, internationally. The important part is that is completely serviced and hosted by Kariba, and it allows you to kind of have one tool in place, one tool that's facilitating all of your bank integration, bringing bank activity in, possibly pushing your payments out, and then on top of that are the robust kind of functionality and the functional tools that you use to manage these different areas of your enterprise. Managing your daily cash process, managing your payment workflow, doing your risk management and risk analytics inside of a single solution, inside of a single technology, where behind the scenes is also all of that bank integration that's fully hosted, fully supported, and managed. What we're going to see as we go into the demo environment here momentarily is that all of that information is going to be a baseline and applied for a part of our forecasting. If we have all of this history, why not leverage that perhaps as a part of our forecasting process? So that's the importance as we see it from a bank connectivity perspective. What I'll do is I'll pass it back over to Ian and talk about the importance from an ERP integration and how that looks for our existing clients.
So thanks again, Tom. So for ERP integration, this is absolutely a critical point, and I was touching on it earlier of basically where most of the vision originally a few years ago was understanding and thinking that your GL was the basis of your or your entire ERP system. So now when we really look, and we have our diagram up here, if we look at the understanding that from a market perspective, we've also highlighted in the top left as examples, MRI, Yardi, and RealPage, where today there is already data that is passing between Kariba and each of these systems. So for anybody that's on the webinar today that may have questions relative to how that works, that's something we will be happy to discuss in the future with you directly. The key here is that we now are at a point where you actually see the active integration between the general ledger and True Treasury, the True Treasury functionality. So if we really kind of start to look at the top, we see that you've got your GL system rolling into the Treasury system, the connectivity to the bank. You see when it comes from the left to the right, we're actually seeing everything from the payment orders and the checks, the GL entries and the invoices and bills passing directly to the Treasury system, and coming back from the banking side, our actual bank statement file, and ultimately the GL entries actually hitting the GL system. This right here is what we look and talk to our clients about, how this becomes an interaction of a life-changing experience for the end user. It really is because of that integration of the hundreds of banks that are part of the Kariba network, the ability for that information to go back and forth, the ability to have your single single dashboard and the vision of that dashboard directly providing the data for you, aggregating it, and then ultimately bringing those entries back to the GL. Basically, if you look at this in terms of investment from the intellectual capital of your team, I know there is a direct ROI evaluation that's very easy to prove of the value of doing the ERP integration. The experience from each client in doing this, people think that the integrations themselves are fairly complicated. In truth, most of these are completed from a design perspective to implementation inside 45 to 60 days, if not significantly earlier. And it is a fairly painless process from an end user perspective. So some of the hurdles that we've seen of the concerns of people where they feel implementation of any system or interconnectivity or passing data between the systems are difficult, those days are far behind us. We have, as an example today, active instances of data that's passing between each of these GLs and Kariba today, and those clients have seen the efficiencies that they've invested in. So now actually, Tom, if we want to flip now back to the cash flow forecasting efficiencies.
Yeah, absolutely. And it's a great kind of segue in because as we mentioned, the elements to this integration are part of that forecasting. And regardless of what tool you have in place, it's about being able to seamlessly integrate this information as we look at, you know, your journals or your checks and your vendor payments, your receivables and billings and things like that. How easy and efficient is it to get to that data? How easy and efficient is it to get it into the tool we're using to construct and build out our forecast? With one of the things with Kariba is the ease of kind of that integration, and that we don't and aren't reliant on IT resources to do that. A lot of times people look at this and they go, oh my gosh, I'm not going to be able to get on IT's radar. They're working on all these other projects. I don't even know where to start. Well, don't start with IT. Start with the Treasury technology and understand and see, you know, what can they do and offer from an integration perspective? Do they have kind of embedded ETL type integration tools? And ultimately, as we see on our side, we built the application so that we don't have to rely on IT. We don't have to rely on our clients developing anything to integrate into Kariba. And on the other side, we don't have to develop or code anything in order to facilitate that integration. With 1,600 clients around the world integrating all of these different data points you see here, we don't have to deploy resources from our side to code. Instead, we have embedded technology in order to facilitate these different points and these different mapping areas as we see on the diagram. So let's talk about the efficiencies of the forecasting, and that's going to be an element to this. So really the way that we see and understand from a cash flow forecasting perspective is kind of a couple of step process. So if we think about it, what it is basically, first there's a consolidation of data that occurs. And these are just some ideas of where we're getting information from. The first is going to be, you know, as we were just talking about, bringing in data from MRI, bringing in the information we have within Yardi, or leveraging other tools we have, Hyperion or budgeting tools or Excel worksheets, being able to bring that information in. Additionally, we talked about having the bank data. Again, an elemental piece to forecasting is the historical context of what has occurred in our cash flow activity. And then also we might be relying upon different areas or regions or groups, different portfolio managers perhaps, or different individuals within our organization that are responsible for specific properties. They might give us today an information or email us and send us their spreadsheets, and then we have to, you know, pull all of that down and combine that into our master and look to structure into a broader report. These are those data consolidation points that we'll want to use and that we'll want to bring in. From there, once we have that and we've constructed and understand, you know, here's, okay, finally we've got everything parked and everything into you know, our sheets or into our tool, then we'll look to do some modeling, do some scenarios. How easy is it for us to say, well, what if we do this? Or what if rates go this way? Or what if we take an increase to 5% on our rent or rent receipts? What would that look like to our forecast? Being able to kind of model and build scenarios and more efficiently track those would be an element to kind of that forecasting process. Oftentimes on our side, that's typically where we see forecasting ending. We've done all of that work, we're exhausted, we finally pulled all the information together, we've spent, you know, how many man days doing that, we produce the report, we put it on the desk, and then we move on and keep going until the next month or the next quarter when we have to do it again. What's missing is a lot of times we find is the tracking and the analysis in terms of how accurate was our forecast. Usually it's because it's a human resourcing constraint. We don't have the time to tie back to that. We have a whole month's worth of data. How are we supposed to then go back and apply that back to our forecast and see if we were off? At a high level, usually you know whether you're accurate or inaccurate, but the problem is we don't usually see that there's a understanding as to why. Where were we off? Was it off because of this specific property of ours, or a specific group of properties, or this specific type of cash event that we were planning for? Again, doing that type of focus is oftentimes difficult when you're trying to do and manage this all, say, through an Excel worksheet. With that process, and as a result of that analysis, what we have to kind of do is a refinement, that we have to get feedback as to, well, what was wrong? What was wrong with that forecast? Why were we off? And then understand, make sense of that, and apply that back as we go and do the process all over again in the next month or the next quarter. So you can see it's a continuous process from consolidating, modeling, analyzing, and repeat. And kind of having a tool that helps specifically in the consolidation and automating that, taking that from a process of possibly, days to, a very short amount of time, an hour of consolidation, being able to then more easily do scenarios and understand, well, which scenarios are working better, and then to do the analysis on the variances of them. Specifically in the data integration, in terms of that data consolidation, just kind of piggybacking off of the ERP discussion and piggybacking off of the Excel, the ERP integration, there is kind of other elements that we would see here, and understanding what also goes in that we would see from your cash forecast. Again, you're going to have your AP systems and your account receivable systems. As I mentioned, you're going to have different maybe budgeting or financing tools that FP&A uses, or individuals like that. And then also, as I mentioned, Excel is just an element to forecasting. Excel is just an element of business. So there might be, and I'll show you the ability to easily integrate, say, Excel information into our forecast. And then lastly, from a financial transactions perspective, one of the things with Kariba being a completely integrated solution is that we have the ability to structure our debt contracts, structure our investment holdings and our derivatives. Well, if we're doing that in one system and then forecasting in another system, there's a manual process that has to get done to take the cash flow related to the cash flows related to the financial activity, pull that into our cash forecast. With Kariba, because we have everything integrated together, those debt holdings are a part of the cash forecasting that we're doing. Ian, did you have anything additional to add on this one before we move into the system?
Yeah, I think just, again, touching on before, what's so important here is the fact of the ability to, integrate with the various GL systems through the integrated data exchange is what's key. And of course, each system, whether it be as examples, MRI, Yardi, or RealPage, they all have different tools that are available to us out of the box to be able to ensure that we can exchange that data and have that consolidated data pool. So I really think that, that's a great opportunity to interconnect and centralize that information.
Awesome. Yeah, couldn't agree with you more. So I think what we'll do now is to kind of give some food for thought, I guess, from a system perspective, and kind of understand, what Kariba is able to do and how this would look from our system, and allow you to align that with ways that you might be doing this today, via Excel or possibly other tools that you might have in place there. So just give me 1 second. So there's those on the phone that are possibly users of Kariba, but then there's others that have no experience or have not been involved with Kariba in the past. And I'll quickly just kind of spend 10, 15 minutes here going through some of the capabilities of Kariba and how it aligns with our clients in the real estate market and how they're using the application, specifically on the forecasting side. Very briefly on Kariba, what you're seeing here is our Kariba application. It's the Kariba system. And what you're looking at is a landing page of the solution. So, specific to my role and my responsibility, I immediately logged into a portal where I have very quick graphical views of what's important to me. So you can understand and see, well, I have different kind of tabs here for various activities that I'm responsible for. I work with the capital markets. I also do our cash management, and I also work on the supply chain side. So I might have different tabs for different things that I do. But just to give you an idea, if I want to understand and kind of see some of my holdings, you would be able to see, if I expand this out, all these different reporting elements or reporting widgets related to our holdings. So, I have two portfolios. I have real estate portfolio 1 and real estate portfolio 2, and I understand from a liquidity perspective, where's that residing and what portfolio is that living in. From a forecasting perspective, if I'm looking out into the future, I'd be able to see what do those cash reserves look like. Are they going up? Are they going down? And that's going to be based off of that operational forecasting that we're going to talk about. I get visibility in terms of what receipts do we have coming in, what supplier payments do we have going out. Am I at risk of being overdrafted at some point? Do I need to transfer or maneuver cash around? Do I need to borrow against some credit facilities that we have in place? And I'm able to more effectively gauge that ahead of time with the accuracy of a forecast, which does lead down here to one of the other elements inside of my dashboard, which would be an understanding in terms of, well, how accurate has our forecasting been? You can have multiple versions in those scenarios and models as we were talking about running. And I would be able to understand, as you can see here with this line graph, how well are we aligned with that? Are we over? Are we under? Did we get accurate? And if we're not accurate, maybe from there, I want to drill down and get more information. All of the information you're seeing here related to the forecast, related to, for instance, where my cash is by each of the different properties that I have, all of these things are going to be, all the information here is predicated off of the data that's residing inside of the application. So if we go a little bit deeper behind some of these numbers and talk a little bit more on the forecasting side, one of the elements of Kariba to help in your processing is the establishment of workflows. This is something very important for our clients, a very important part of our kind of our treatment in terms of Treasury is leveraging technology to establish processes that teams will follow. And dependent upon how the organization is set up and dependent upon how Treasury is structured, we're able to put in place a set series of steps that the users of the application will use. What you're seeing is these tiles are going to link me as the user to different areas of our application and different processes that I am responsible for, things that I'm doing every single day or every single week or at the end of each month as a part of our closing out of our book. So this just gives you an idea from both a cash management as well as a cash forecasting perspective what I might do, where first I might start and kind of understand my prior day activity. I might then set cash positions and understand what cash I have coming in and going out, borrowing off of that. And then from there, I'm working on our forecasting and building that out and validating that and kind of massaging that on a regular basis. Before we talk about the specifics on the forecast, I'll just kind of highlight a few things here as it relates to the cash reporting. Going back to the original point at the beginning, right? Bank integration and bank balances and bank history are all very important part to the overall forecasting process. Because Kariba is integrating directly with your banks, we're able to easily kind of drill down into very specific worksheets that will give me an understanding in terms of what our balances are and where they reside. What you're seeing here is each line is an individual bank account, and I have this organized by each of the different holdings or properties which I have. So I have Anderson Avenue and Brook Street, and Sherwood Drive. I have different portfolios or groups of portfolios here, so I know what balances are where within each of the properties, but also in an aggregate, say at a portfolio level. All of this information is coming directly from the integration of our with the banks, and we're not only pulling in just the bank balances, but if I just click on one of these, you'll see that it's also showing me all of the underlying bank detail. And having this level of information and having the individual transactional information from the bank will be a key driver to the way in which we do forecasting. What this allows us to do is to very easily search and filter on our banking activity from a single portal, rather than going into Bank Portal 1 and then Bank Portal 2 to try to find that one transaction. We have all of this information reporting into Kariba. It's very easy for us to get to that information when we need it. But again, having each of these individual debits and credits will be a part of our history, and then we can allow that to be trended off of and looked at and referenced as we look at our forecasting. So this is that kind of view of understanding where my balances are and where those balances reside, having the ability to easily flex that data and change either date conventions or how far out we want to go, or how far in the past we want to look, but also organizing this by different, different data elements by bank or by region or by different categorization of our bank accounts. Kind of coming back to my workflow, I can continue on through some more views here, where one's going to be more of a detailed cash positioning view. Again, let's keep an eye on those 3 properties that I manage: Anderson, Brook Street, and Sherwood. Well, I know from a holdings perspective where their balances and how much cash they were sitting on as we started our day today. But then I can see what monies do they have coming in related to the deposit activity that we're expecting, or related to interest that we're earning. And then also what money do I have going out? What am I obligated to pay based on each of those different properties? So I have escrow payments going out. I have property management fees. And all of this information is combined and included as a part of our cash balance and cash positioning. So I know where my cash is right now. I can more effectively deploy that liquidity and again, apply that to maybe an investment or buying a new property or paying down something on my debt portfolio. This gives you an idea of the elements that we can use in the breakdown of cash flow, making it very easy to kind of have your own individual groupings of cash activity that are applied not only in your forecasting, but also in your daily cash positioning process. Now let's go back to the workflow and talk a little bit more on the cash forecasting side. What we're doing is we're able to use the application to do that data consolidation. Let's think back to the schematic that we were talking about with bringing all the data together and using that information. Well, as an idea here, what you're able to do is kind of see and view what my forecast looks like, say, going out 1 month. Within the application, we can go out as far as you need to. We can go out, whether it's 1 month or a typical, say, 13-week, 90-day view or further. We have clients that are forecasting 2 years out, 3 years out, 4 years out. I'm able to see week by week by week. Here's what I'm anticipating. Here's what I'm expecting across my different properties. And you can roll these up or group these views a number of different ways, but I know here's what my anticipated deposit activity looks like, where looks like we return more or bring more in the first couple weeks of the month versus the last couple weeks of the month. And then again, there's that breakdown of what we have going out, where, for instance, we have an expected mortgage payment at the end of this month for $33,000. All of this information is coming from all of those different data sources, information being fed in from your Yardi or MRI systems, information coming in from the budgeting tools, or information coming in from Excel. If we look at that as an example, I can just click in and you'll see the breakdown of the expected cash flows that we're collecting from those different areas of the business, from AP, from AR, and from elsewhere. We can see the classification of that as well. Just as an idea, what we're going to do is for the sake of kind of keep being familiar to us, we can have an Excel spreadsheet. So I have an Excel workbook and I have these Anderson and Sherwood, and I'm expecting these cash flows on these given dates, 100,000 coming in there, 5,000 coming in there, 8,000 going out here. What ideally we'd want to do is to take that information and consolidate that very easily into the forecast that we're constructing. And there's no easier way to do that than just copying and pasting data. So simply by doing that all too familiar Control-C, by copying the records from my worksheet that I'm working on in Excel, going into my forecast and doing a Control-V, I'd be able to add those transactions or those elements directly into my forecast for these dates, for those agreed upon amounts that I have there, and committing them to my forecast. This information can be brought in, say, from a tool that way by manually doing it, but also we can automatically feed that in via direct integration through systems, through the systems themselves, feeding information in from Yardi, feeding information in from MRI or elsewhere. So this gives you an idea of what the worksheet looks like in terms of kind of going out and how that looks. Let's just talk a little bit more of also constructing the forecast. So not only are we able to bring information in from those outside systems, but additionally, when we're setting up our forecast, we might have recurring events or recurring cash flow activity. What that means is, there's going to be parts of our forecast where we generally know the time frame. We generally know the amount and when that's to occur. So these could be things like tax payments or payroll payments or insurance payments. And as an example, I could set up, here's what my payroll looks like. And all you're doing is you're saying, here's the amount of my payroll, here's the account that we're paying out of, and then I'm able to apply that on a set schedule in terms of how often are we going to pay that. So I can say, for instance, if this gets paid monthly, or you could set this, say, to be bi-weekly or weekly. That allows me just to set that up easily one time and then have that included on my forecast, say, for the remainder of the year. I don't have to remember to include that in my forecasting on an ongoing basis. Then lastly, as I discussed, there's also the ability to create those cash forecasting models. This gives you the control to leverage that history, to leverage that rich data of our bank information and build in various scenarios and various models on top of that. As you can see, as the user of the application, I can add my own scenarios and I can run existing scenarios that I might have in place. So we have a collection scenario that we run against our, say, our history based on our clients or based on our various properties. When we're building out these scenarios, it's very easy to identify what groups of information are we referencing or looking at, what banks or companies or properties, and then what scenario are we going to run in history. As you can see here, I might say, I'm just going to copy what happened over this time frame here, and then I'm going to use that to apply a forecast here, but I'm also going to apply a 15% increase on top of that. That's a very simple example, but there's other methods or modes such as averaging history, as well as extracting a trend. And that will do a more sophisticated linear regression of the history and use that to apply on the specific cash flows that you're pointing at in the forecast. So that's going to be those areas, those elements, those variables, if you will, to your forecast that we ultimately were structured inside of that view. I'm able to see today moving however far forward you need, what does that forecast look like? If we think back to the diagram, we have to also track and do the variance analysis on that. And that leads us to the variance tracking tool. The Kariba's variance tracking tool, variance tracking capabilities are very specific and allow us to automate the variance tracking of our forecast. Again, something that's typically very nuanced and very manual in an Excel environment can be rapidly deployed through technology. And what this does is it allows me to set up different views and different analysis where I'm able to align and understand, here's what my, say, by property or by group of properties, here's what I originally had forecasted or planned for, here's what actually occurred, and then net over this given month, right? And I'm just looking from the prior month, for example, here's how much I was off. It gives me that visibility, and it does it on that more direct cash flow view where I can see the breakdown of the individual cash flow types, where I would see, for instance, that I was off by a small amount on my expected escrow payments. Now, this gives me that high level view, but perhaps I want to go deeper and I want to drill down. And this gives us the capability to go into every day of the time period if we wanted to, but I can just go into these weekly times and I'll say, just show me the variances for this weekly bucket of time here. And what that will do is then change this and show me just the variances for that time frame. So for example, if we had controlled disbursements expected at $53,000, but what actually occurred was $50,000, we know that we were off by $3,000. This is highlighted pink because there's actually an explanation. When we built this in partnership with our clients, and we said, how do you do this today? And we saw something common. Everybody did it in Excel. Everybody right-clicked and added a comment. Well, we did the same exact thing so that when we need to explain why there is a variance, I simply right-click and I can add a comment to this. Different than Excel is that we are able to classify the reasoning, so we can make very specific reasons and report that up. In my example, I delayed a payment to my vendor, Acme, who takes care of my property, so I didn't pay them that $3,000 that we were expecting or that I originally expected to pay, and you'll see that it's audited. It tells me who entered this, my user entered this on this date at this time. All of this is reported up. It gives us a very granular view of the forecast and of the variances, but also gives us what we call the scorecards. This allows us to say at a property level, at a group of property levels, at a portfolio level, or at the company as a whole, here's what I expected, here's what happened, and then by each of these subperiods, here's how much I was off, and then net over that given time frame, I was off by 11%. We're seeing our clients use this to track against their own internal KPIs or internal matrices that they're measured against. This tool gives us the automation to kind of use that constructed forecast that we were looking at, automatically apply the actual bank activity, and be able to compare that side by side. One other thing to note as it relates to this is that in a simple example here, it's showing me original forecast to actuals, but understand that we can have those different scenarios and models running. It gives us the ability to actually view different models or scenarios side by side. So within this view, we can compare multiple forecasts to one another and ultimately also review and see what that looks like in comparison to the actual bank activity. That gives you an idea as it relates to Kariba in terms of some of the capabilities that we have in terms of constructing and analyzing our forecast, as well as assessing and tracking the variances to that. If we come back to kind of the presentation here and kind of piggybacking on top of that, we want to kind of leave you with some final thoughts, some parting words, and some things to consider, and some next steps possibly to take as it relates to kind of assessing your technology footprint as it relates to your Treasury world, as well as your forecasting process. Ian?
Yeah. So, you know, basically, at the end of the day here, we have a significant opportunity to allow for the automation that we really want to see for the Treasury world. This is a phenomenal change that can happen within your organization. The difference is now is how are we going to explain this internally so that what we can take away from today and everybody can understand the very important high-level benefits. And we have that here where we talk about, you know, the crossover between the real estate needs and the cash flow forecasting. So as Tom said earlier, you know, forecasting allows for effective financial decisions. You know, it's amazing having that information at your fingertips every single day and seeing something that in the past has taken weeks and now can be in your hands immediately. From a real estate market trend, okay, we talk about the term, everybody has the term big data and availability and exchange of data between systems. Now, I think of big data also in two ways. There's big data relative to the overall market, and then there's the big data that's attributable specifically to your information and your platform. The aggregation of the information that you have among each part of your ERP system, that is, believe it or not, still the definition of big data. That's the big data that applies to your organization and how that consolidated information will allow you to manage the business today and forecast for tomorrow. The integration of Treasury and the ERP system together allow for that aggregation and the accessibility that you will have to the big data that applies to your specific real estate company. Another thing here, you know, when we really talk about, you know, being able to maintain open communication with the people providing information to the forecast. This is, you know, we're in a world of crowdfunding. And when we talk today about exchange of information, I've talked earlier today about doing it on both a centralized and a decentralized basis. And with the technology that we have now, there are no holes. There's no ability to be able to say that I didn't have that information. As we consolidate it, we enlist others to provide that open communication, as well as giving those dashboards that bring that information together in that single interface. It becomes and gives you that really that life-changing type of experience in how you're able to use the systems. Tom, do you have any comments here as well?
Yeah, I think if we look at the last kind of few there, forecasting is a team effort. It's not a Treasury exercise, it's a business exercise. Cash flow forecasting is coming from all different sides of the business, from our different properties that we're managing and generating our income to different supplier activity and supplier arrangements that we have. So you have to enlist others throughout the organization. Those others are going to be individuals on the finance team, those individuals on the accounts payable team that manage those supplier relationships, and yes, maybe even the IT group. Enlist them to get to the information you need, to get to the data that you need. Sometimes when you say, where does this data come from? Where's that forecast come from? Well, it comes from the spreadsheet that somebody gives me. No. Where did they get it from? We should understand where it originates from and get to that source. And if we can get to that source and we can open lines of communication, we can remain consistent. Work together, bribe if you have to, get to the information and get to the individuals to get, the better team kind of initiative with that, which then goes to the next thing, which is working together and understanding what the end goal is. The end goal is not to produce a spreadsheet. The end goal is not to get to the report and wash my hands of the forecast. The end goal is going back to what we talked about at the beginning, returning cash flow to our shareholders, achieving a better return on our investment, or reducing interest expense by paying down debt early. What does that mean to me? Have it clearly understood as it relates to all the parties involved, what this means for them and for the company as a whole. And then lastly, measure what you've done on your forecast. Refine the forecasting process and continue to repeat it. Forecasting is as much as an art as it is a science. So it does entail and kind of have to involve continuous refinement and massaging and changes on an ongoing basis as the business changes, the economy changes, as the world around us changes in our cash forecast. So with that, I think what we'll do is I think there's been a couple of questions, or sorry, before we do that, Ian, you just want to comment upon any more on the FITECH side?
Absolutely. So I know we're going to jump into questions here in a minute. So, but I did want to cover, because we had the questions of kind of the various services that FITECH offers, and also how FITECH works with Kariba. So for everyone together, again, I kind of said earlier that FITECH operates as the IT department for any real estate company, and in that, we're showing our list of services here, which we start off with core system selection and implementation. So in the case also of working closely with Kariba as a certified partner, we are able to not only help set the system up for you and establish what the needs are there, but also work towards doing the integration with the ERP system, the GL system, as we've been covering today. In addition to that, for those users that are, MRI, Yardi, or RealPage users, among the other accounting systems in our realm, we're able to help with implementations and upgrades, all customizations and support. Uniquely for us market, we also are able to fully provide the IT services that are our clients need. So that would be private cloud services, network and engineering support, down to the procurement to the desktop. So if everybody just kind of pictures a single help desk, an organization that's able to help end to end for each of the specific applications that support your organization, as well as the core networking and technology support, both at corporate as well as out of the properties, that's our niche. And it's understanding the needs specifically of the real estate owner and operator.
Awesome. And then lastly, just as a kind of, if you want to, next step, before we do take the question and answers, there are some relevant, ebooks and content out there. I encourage you to kind of go to our webpage, specifically at Kariba. We have some challenging ebooks, some things that will really kind of help you and kind of give you some direction in terms of achieving a better cash forecasting process. And then at a more high level, some of the advantages for the modern treasurer. So those are going to be on the website. Those will be linked here on the follow-up slides that we do provide. So with that, with the last few minutes here, we will kind of just take a couple of questions and have they come in there, Alana.
Hey, Tom. Thank you, guys. That was a great presentation. So let me get started with the first question we got here. It is, what are some examples of conventional wisdom when implementing a core module like Treasury?
You want to take that one?
Sure, actually. Let me just click back to, Actually, Lena, can you just repeat the question for me?
Yeah, of course. So the question is, what are some examples of conventional wisdom when implementing a core module like Treasury?
Absolutely. So, when implementing, any module, understanding your current process is critical. as well as outlining and understanding, and this is where we have discovery meetings with the clients to actually talk about what they would like to see, how should it work, what are best practices. What we found with every company is that every company has technological and technical needs, but they also have a very specific culture. And that culture is made up of how often people need to see specific pieces of information, how often information gets exchanged, how quickly it's needed, and at what time throughout the month and throughout the quarters. So as we establish that, if you don't have the discussions of what is both working and not working today before you go into implementation, it creates a significant barrier. We tell people all the time that implementation of any product, especially Treasury, is just like building a house or building a building. And when it comes to design and understanding workflow, it is a lot easier to make changes in the design stage than it does once you go into implementation. So taking the time to understand what is working, what is not working, and setting expectations of the desired outcome is my conventional wisdom that would fall into giving everyone a real insight to make it successful.
Great, thank you, Ian. So let me move on to the second question here that we got. It is, as there are several service provider options, what differentiates Kariba and FITECH?
I'll take that.
Tom, go ahead.
I'll take that one. I think one of the things that we're able to do is we bridge kind of the best of the Treasury expertise and Treasury knowledge with the knowledge and focus on the real estate vertical. There's such a nuanced business and nuanced niche of companies out there, you guys on the phone, that FITECH really has enlisted us, and we work together with those specifics and kind of have developed that inside of our application to meet that challenging market. And then on our side, on the Kariba side specifically, bridging and kind of bringing to market or bringing to you kind of the experts, the ones that have sat in your seat, that have done Treasury, have done cash management, have done risk management, and are able to deploy a solution that's very comprehensive and covers kind of all areas of the business in that regard, but also allowing from a technological perspective, better integration, integration with your ERP systems, integration with your banking platforms, all under one umbrella, all under one roof and with one partnership. Nobody else in the market kind of has that.
Awesome, thank you so much. We have one more question here. Let me pull it up really quick. It is, how do you put together your current day cash position? Do you import current day activity from your banks in addition to data or outgoing wires?
That's a great question. Yeah, so you kind of saw that, and I briefly touched on it, right? You could see what your balances were, what money's coming in, what money's going out, and then where am I at right now, right? Am I in overdraft, right? Am I at risk of paying overdraft fees, or do I have excess cash, right? That information comes from all of those sources where that question is coming from. It starts with your bank, right? It starts with what happened on my account, what money came in, what money came out, and that's a starting point. But then from there, it's being able to import the activity. And what we're talking about with that is, okay, if I know that I cut X amount of checks today, or that we pushed out this amount of ACHs today to our vendors, well, we want to bring that in from, let's say, MRI or ERD or from one of those systems and incorporate that into that position. Maybe it's also spreadsheets, as we saw, as simple as just taking information that I've consolidated and uploading to set my positions there. And then additionally, for wire activity, one of the things that I didn't discuss though there in the system is that Kariba is able to facilitate and manage the full payment workflow and payment process and payment integration with the bank. Leveraging the solution for that, meaning that we're putting our payments through Kariba and approving those payments in Kariba, it means that that information automatically feeds through to our forecast. And that's really, really critical. As soon as we put a wire in to say we're paying such and such a vendor for $100,000 today for our annual maintenance fee or monthly maintenance, that immediately impacts our cash position. We can immediately see that in the cash balance. We'll know immediately we got to keep that reserve there, or we need to fund money to pay for that. And we're able to better understand that rather than having to rely upon email, rely upon communication, remind somebody, hey, I just sent this wire, make sure we don't move that cash. And that's really one of the great benefits of Kariba and the technology that everything's kind of integrated and tied together there. So if there's no other questions.
Sorry, let me check again. I don't think there's any more questions for the day here, and we are at the top of the hour. So if there are any other questions, feel free to email those over to us at treasury@kariba.com, and we'll do our best to address those questions offline. And with that, I'd like to thank you, Tom and Ian, for this great presentation today, as well as everybody else who was able to join us today. Thank you.
Appreciate it, everybody. Have a good rest of the day. Thanks, Ian. Thanks, Elena.
Have a great day.